Given the bullish price forecast for Bitcoin and the upward trend in historical prices, a long-term investment strategy appears to be favorable. The entry price should be around $101,000, capitalizing on the current price level while allowing room for potential price corrections. The stop loss should be set at $99,700, safeguarding against significant price drops. This level aligns with a recent historical low and provides a cushion against market volatility. The target price is set at $113,000, aligning with the highest projected price in the forecast, allowing for substantial profit potential while acknowledging potential market fluctuations. This strategy aims to capitalize on the anticipated upward momentum of Bitcoin. By entering a long position at $101,000, investors can potentially benefit from the projected price increase towards $113,000. The stop loss at $99,700 minimizes potential losses, while the target price offers a substantial profit opportunity. This long-term approach acknowledges the inherent volatility of cryptocurrency markets while seeking to maximize returns within a defined risk framework. Given the price trends and forecast for Bitcoin Cash, a conservative investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the current price hovering near the support level of $534.1. The forecast suggests a slight recovery in the coming week, but with a potential to fall back down. In this scenario, a short position is advisable to capitalize on the potential for a price decline. An aggressive short-term investment strategy could involve entering a short position at $540, the current price level. The stop loss should be set at $546.60, the resistance level, to protect against any unexpected price surge. The target price could be set at $534.1, aligning with the support level and allowing for a reasonable profit margin. This strategy capitalizes on the bearish sentiment indicated by the price trends and forecast while managing risk effectively. Given the price trends and forecast for stacks, a short-term investment strategy appears prudent. The historical prices show a slight downward trend, with the current price hovering near the support level of $2.319. The forecast suggests a potential increase in price towards $2.57 over the next week, indicating a possible short-term rebound. Therefore, a long position is recommended to capitalize on this potential price increase. An entry price of $2.35, slightly above the support level, would allow you to enter the trade at a favorable price point. The stop loss should be set at $2.23, below the recent lows, to protect against significant price drops. The target price can be set at $2.54, aligning with the higher end of the forecast, allowing for a healthy profit margin. This strategy aims to capitalize on the short-term upward momentum of stacks while mitigating risk through a well-defined stop-loss order. Based on the provided historical price data for Ethereum, coupled with the bullish forecast, an investment strategy focused on a long position appears promising. The historical prices demonstrate a clear upward trend, with the recent fluctuations hovering around the $3,800 to $4,000 range. The forecast predicts a continuation of this upward momentum, with prices potentially reaching $4,170 in the coming weeks. Therefore, a suitable investment strategy would involve entering a long position at a price point slightly below the current market value, around $3,850. A stop-loss order should be placed at $3,700 to mitigate potential downside risk. The target price for this investment should be set at $4,100, aiming to capitalize on the forecasted price appreciation. This strategy aligns with the bullish sentiment indicated by both the historical price data and the forecast, aiming to capitalize on the potential for further growth in Ethereum's value. Given the provided price history and forecast for Ripple, a medium-term investment strategy appears most suitable. The price history shows a fluctuating trend with an overall upward bias. The forecast predicts a continued upward movement, reaching a potential peak around $2.90 in the coming weeks. This suggests that Ripple could experience a moderate price increase over the medium term. Therefore, a long position is recommended to capitalize on this potential growth. An ideal entry price would be around $2.45, aligning with the current price and the support level. A stop loss should be set slightly below the entry price at $2.40 to minimize potential losses. The target price should be set around $2.75, aiming to capture a significant portion of the predicted price increase. This strategy balances risk and reward, allowing for potential profits while mitigating downside exposure. Given the current price trends and the provided forecast for Binance Coin, a short-term investment strategy appears to be the most suitable approach. The historical price data suggests a volatile period for Binance Coin, with fluctuations both upwards and downwards. However, the forecast indicates a potential upward movement in the coming week, reaching prices around $729. This suggests a short-term opportunity to capitalize on this potential increase. Therefore, a long position is recommended for a short-term investment strategy. An entry price of $715, aligned with the current price and the support level, would be advisable. To manage risk, a stop-loss order should be placed at $705, slightly below the recent low. The target price could be set at $736, aligning with the highest predicted price in the forecast. This strategy allows for potential profit from the anticipated price increase while minimizing potential losses through the stop-loss order. Given the current price trends and forecast for Stellar, a cautious investment strategy focusing on a short-term approach is recommended. The historical prices demonstrate a fluctuating pattern with a slight downward trend, while the forecast suggests further declines in the coming week. The support price at $0.0968 acts as a potential floor for the price, while the resistance at $0.5027 indicates an upper limit for upward movement. This suggests a limited upside potential in the short term. Therefore, a short position on Stellar is advisable to capitalize on the anticipated price decline. An entry price of $0.450 would be suitable, aligning with the forecasted price. The stop loss should be set at $0.475 to protect against any unexpected upward price movements. The target price should be set at $0.410, aiming to capture potential downside momentum before the price reaches the support level. This strategy allows for potential profit while managing risk by limiting potential losses. Given the provided historical price data and the forecast for Toncoin, a cautious investment strategy focused on the short term appears most suitable. The historical prices demonstrate a fluctuating trend with no clear upward or downward momentum. The forecast suggests a slight dip in price over the next week, aligning with the recent price movement. Therefore, a short position could be considered to capitalize on this potential decline. An entry price around $6.30 would allow you to enter the market near the current price, with a stop loss set at $6.40 to limit potential losses. The target price could be set at $6, aiming to profit from the anticipated price drop. This strategy prioritizes risk management by setting a stop loss and targets realistic price movements based on the forecast. The Cardano price history shows a volatile period with both upward and downward movements. While the forecast suggests a slight upward trend, the recent price action has been mostly sideways. The support price of $1.066 provides a potential buying opportunity, but the resistance at $1.1296 could limit further upside. Given this scenario, a short-term investment strategy with a bullish bias seems appropriate. Therefore, a long position is recommended with an entry price near the support level of $1.066. A stop loss should be placed slightly below the support, around $1.05, to limit potential losses. The target price could be set at $1.1296, aiming to capture the potential upside towards the resistance level. This strategy aims to capitalize on a potential short-term price rebound while managing risk through a tight stop loss. Given the historical price data and the provided forecast for Litecoin, a medium-term investment strategy appears most suitable. The historical prices show fluctuations, but generally trend upwards. The forecast suggests continued upward momentum in the coming week, reaching a peak around $128. This indicates a potential for Litecoin to appreciate in value over the next few weeks. Therefore, a long position is recommended. An ideal entry price would be around $121, aligning with the current price and allowing for potential upside. A stop loss should be placed at $117.36, the support price, to minimize potential losses if the price reverses. The target price can be set at $136.06, the resistance price, aiming to capture a significant portion of the anticipated upward movement. This strategy allows for a balanced approach, capitalizing on the potential for growth while managing risk effectively. Based on the provided price information for STRK, a bullish investment strategy is recommended for a medium-term perspective. The historical price data reveals an upward trend, with recent fluctuations around the $4.46 level. The forecast suggests continued growth, reaching up to $4.97 in the coming week. This indicates a positive outlook for STRK, suggesting a potential for capital appreciation. Considering the current price and the forecast, a suitable entry point for a long position would be around $4.40. A stop-loss order should be placed at $4.25 to protect against potential downside risks. The target price could be set at $4.80, aiming to capitalize on the projected price increase while allowing for a healthy margin of profit. This strategy balances risk and reward, allowing investors to participate in the potential upside of STRK while mitigating potential losses. Aptos's historical price data reveals a slight downward trend over the past 2 weeks, hovering around the $13 mark. The forecast suggests a continuation of this trend, with prices potentially dipping further. Considering these factors, a short-term bearish strategy appears most suitable. We should aim to capitalize on the anticipated price decline. An aggressive short-term investment strategy would involve entering a short position at the current market price, around $13. Setting a stop-loss order at $14 would protect against unexpected price surges. The target price should be set at $12.88, the support level, aiming to secure profits before the price potentially rebounds. This strategy leverages the predicted downward momentum and aims for a quick return within a short time frame. Based on the provided SE price history and forecast, a cautious short-term investment strategy is recommended. The historical prices show a general downward trend, with recent dips below the 60 cents mark. The forecast further indicates a continued decline in price over the next week, suggesting a bearish outlook. Given this trend, a short position on SE appears more suitable. An entry price of 60 cents would allow for capitalizing on the predicted price drop. A stop-loss order should be placed at 62 cents to limit potential losses if the price unexpectedly rebounds. The target price should be set at 55 cents, aiming to capture a significant portion of the anticipated decline. This strategy prioritizes risk management while capitalizing on the potential for short-term profit from the expected downward movement of SE. Based on the provided data for Ethereum Classic, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price history reveals a fluctuating trend with no clear upward or downward momentum. The forecast suggests a slight upward movement in the coming week, but the price remains near its support level. Considering this, a long position could be considered. An entry price around $33 could be appropriate, aligning with the current price and the forecast. The stop loss should be set at $32.53, just below the support level, to minimize potential losses. The target price could be set at $34.06, the resistance level, aiming to capitalize on the potential upward movement. This strategy allows for potential gains while mitigating risk by setting a clear stop-loss point. Given the price trends and forecast for Polygon, a cautious investment strategy would focus on a medium-term approach. The historical prices show a volatile period with both upward and downward movements, indicating a lack of clear directional momentum. The forecast suggests a slight downward trend over the next week. However, the support price is relatively low at $0.4276, suggesting a potential for a rebound. Considering these factors, a long position is cautiously recommended. An entry price around $0.594 could be considered, aligning with the recent lows. The stop loss should be set at $0.581 to limit potential losses in case the price continues to decline. The target price could be set at $0.655, aiming to capture a portion of the potential upward movement suggested by the forecast. This strategy allows for a balanced approach, acknowledging the risks while aiming for moderate gains in the medium term. Given the provided information about AEVO, a short-term investment strategy appears to be the most suitable approach. The 2-week price change shows some volatility, with both upward and downward movements. However, the forecast price suggests a slight upward trend over the next week. The current price is hovering near the support level of $0.4818, indicating potential for a bounce. Therefore, a long position on AEVO is recommended. An entry price of $0.490 could be considered, allowing for a buffer above the support level. The stop loss should be placed at $0.482 to limit potential losses if the price drops below the support. The target price could be set at $0.520, aiming to capture a potential upward movement towards the resistance level of $0.516. This strategy allows for a relatively quick turnaround, capitalizing on the anticipated short-term price increase while managing risk through a tight stop loss. Based on the historical price data and the provided forecast for optimism, a cautious short-term investment strategy appears most suitable. The historical prices exhibit a volatile pattern, oscillating around the $2.50 level. The forecast suggests a slight upward movement in the coming week, but the price remains relatively close to its recent lows. This indicates a potential for consolidation or a minor upward correction, rather than a significant breakout. Therefore, a long position could be considered with a conservative approach. An entry price around $2.50, aligning with the current market price and the lower end of the forecast range, would be appropriate. A stop-loss order set slightly below the recent lows, around $2.35, would help mitigate potential downside risks. The target price could be set at $2.60, aiming to capture a modest profit if the forecast price movement materializes. This strategy allows for participation in a potential upward trend while minimizing exposure to significant downside risks. Based on the provided price information for STRK, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a fluctuating trend with periods of both upward and downward movement. While the forecast suggests a slight downward trend in the coming week, the support price sits at a relatively strong level of $0.6212, indicating potential for a bounce back. Therefore, a long position is recommended with an entry price near the support level at $0.6212. A stop-loss order should be placed below the support price at $0.616 to minimize potential losses. The target price could be set around $0.6613, the resistance level, aiming to capitalize on any upward momentum. This medium-term approach allows for potential profit while mitigating risk by setting a stop-loss and targeting a realistic price level. Given the current price trend and forecast for Solana, a cautious investment strategy would focus on a short-term approach. While the historical prices show some fluctuations, the 2-week price change indicates a slight downward trend. The forecast further suggests a potential decline in the coming week, with prices potentially falling below the current level. The support price of $175.03 provides a potential floor for the price, while the resistance at $222.1 suggests limited upside potential in the short term. Therefore, a short position on Solana is recommended for a short-term investment perspective. An entry price around $220, aligning with the forecast, would be suitable. The stop loss should be set at $227, slightly above the current price, to minimize potential losses if the price unexpectedly surges. The target price could be set at $210, aiming to capitalize on the anticipated decline towards the support level. This strategy allows for potential profits from the predicted downward price movement while mitigating risks with a defined stop loss. Given the price trends and forecast for Jupiter, a cautious investment strategy would focus on a short-term approach. The historical prices show a general downward trend over the past 2 weeks, with the forecast indicating further declines. While there is support at $0.9143, the resistance at $1.2774 is significantly higher, suggesting limited upward momentum. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $1.12 would be ideal, aligning with the forecasted price. The stop loss should be set at $1.14 to protect against any unexpected price recovery. The target price should be set at $1.08, slightly above the support level, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the short-term bearish trend while minimizing risk. Based on the provided price data and forecast for render, a short-term investment strategy appears most suitable. The historical prices show a relatively stable upward trend, but the recent 2-week price change suggests a slight consolidation. The forecast indicates a potential for continued upward movement, but with a more moderate pace. Considering the support and resistance levels, a long position seems reasonable. Therefore, an aggressive investment strategy could involve entering a long position at the current price of around $9.35. The stop loss should be set slightly below the recent support level at $9.06, protecting against potential downside risks. The target price could be set at $9.66, aligning with the highest forecast price for the next week, allowing for potential profit before a potential pullback. This strategy capitalizes on the anticipated upward momentum while managing risk through a defined stop loss. Based on the provided price information for Solana name service, a cautious short-term investment strategy appears most suitable. The historical price data reveals a downward trend, with the recent price hovering near the support level of $0.3112. The forecast indicates a further decline in price over the next week, with the projected lowest price reaching $0.337. This suggests a bearish outlook for Solana name service in the short term. Therefore, an aggressive short-term investment strategy would involve taking a short position on Solana name service. A suitable entry price would be $0.342, aligning with the current price and the forecast. A stop-loss order should be placed at $0.348, slightly above the current price, to limit potential losses in case of an unexpected price surge. The target price would be set at $0.311, aiming to capitalize on the projected price decline towards the support level. This strategy aims to profit from the anticipated short-term price drop while managing risk through a well-defined stop-loss. Based on the provided Doge-Coin price information, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals some volatility, with a recent dip followed by a slight recovery. While the forecast suggests a potential upward movement in the coming week, it remains relatively modest. Considering the current price hovering near the support level, entering a long position could be considered. A potential entry price could be around $0.408, aligning with the current price and providing a small buffer below the support level. A stop-loss order placed at $0.397, slightly below the support price, would help mitigate potential losses. The target price could be set at $0.431, aiming to capture a portion of the potential upward movement as indicated by the forecast. This approach allows for potential profit while managing risk within a medium-term timeframe, taking into account the relatively modest price projections and the recent volatility observed in Doge-Coin. Based on the provided price information for PEPE, a cautious investment strategy focusing on the short term appears most suitable. The historical price data shows some volatility but lacks a clear, consistent upward or downward trend. The forecast suggests a slight upward movement, but the price remains close to its support level, indicating potential for consolidation or even a minor pullback. Considering this, a long position is not strongly recommended at this time. Instead, a short-term strategy could involve waiting for a price dip towards the support level of $0.0000232 before entering a short position. The stop loss could be placed slightly above the current price, around $0.0000247, to limit potential losses. The target price could be set at $0.0000232, aiming to profit from a short-term decline towards the support level. This strategy allows for potential gains while mitigating risk by exiting the position before a significant price reversal. Given the price trends and forecast for SHIB, a cautious investment strategy would focus on a short-term approach. The historical prices show some volatility, with the current price hovering around the support level of $0.0000258. The forecast suggests a slight upward movement, but the price remains relatively low. In this scenario, a long position is advisable, aiming to capitalize on the potential for a small price increase. An ideal entry price for this strategy would be around $0.0000279, slightly above the recent lows. The stop loss should be set at $0.0000274 to protect against any unexpected downward movement. The target price should be set at $0.0000295, aligning with the highest forecast price, allowing you to take profits before the market potentially pulls back. This strategy focuses on a short-term gain, taking advantage of the predicted upward movement while minimizing risk. Based on the provided price history and forecast for Dog with Hat, a cautious short-term investment strategy appears most suitable. The price history demonstrates a recent downward trend, with the forecast suggesting continued decline over the next week. The support price at $2.75 indicates a potential floor for the price, while the resistance at $3.009 suggests limited upward potential. Considering this bearish outlook and the forecast's downward trajectory, a short position is recommended to capitalize on the anticipated price decrease. An entry price of $2.95, slightly above the current price and close to the resistance level, allows for a potential profit margin while minimizing risk. The stop loss should be set at $3.009, the resistance level, to protect against unexpected upward movement. The target price could be set at $2.75, the support price, aiming to capture the anticipated price decline. This strategy prioritizes risk management while seeking to profit from the projected downward trend in Dog with Hat. Based on the provided information for Coin, a short-term investment strategy appears to be the most suitable. The 2-week price history shows significant volatility, with recent declines. The forecast price suggests further downward movement in the coming week, reaching as low as $0.0079. This bearish outlook, coupled with the price hovering near the resistance level of $0.008347, indicates a potential for a short squeeze. Therefore, an aggressive short-term investment strategy would involve taking a short position on Coin. The entry price should be set at $0.0082, slightly above the current price to allow for some market movement before entering the position. The stop loss should be placed at $0.008347, the resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.007764, the support level, aiming to capitalize on the anticipated price decline. This strategy takes advantage of the short-term bearish trend and aims for a quick profit by entering a short position at a slightly elevated price, with a defined risk level and a clear profit target. Given the provided price data for Near Protocol, the 2-week price change reveals a downward trend, with the forecast indicating further declines. The historical price shows a range of fluctuations, but the recent decline suggests a potential bearish outlook in the short term. The support price at $6.138 acts as a potential floor for the price, while the resistance at $6.915 presents a hurdle for upward movement. Considering this information, a short-term investment strategy focused on a short position appears suitable. An aggressive short-term investment strategy could involve entering a short position at $6.87, aligning with the forecast and near the current price. Setting a stop loss at $6.915, just above the resistance level, would help mitigate potential losses if the price unexpectedly rises. The target price could be set at $6.138, the support level, aiming to capitalize on the anticipated price decline. This strategy aims to profit from the short-term bearish momentum in near protocol while managing risk through a well-defined stop loss. Based on the provided data for Internet Computer, a cautious medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with a slight downward bias. While the forecast suggests a period of consolidation around $13, the support price of $11.641 indicates a potential floor for the asset. Taking a long position at this juncture could be risky due to the lack of a clear upward momentum. A more prudent approach would be to wait for a decisive break above the resistance level of $13.691 before entering a long position. This would signal a potential shift in the market sentiment and increase the likelihood of a sustained upward move. A potential entry price could then be set around $14, with a stop loss placed below the support level at $11.641. The target price could be set at $14.50, aiming for a modest profit while allowing for potential price fluctuations within the medium term. Injective shows a downward trend in its 2-week price change, with the forecast indicating further declines. The support price is at $27.36, while the resistance is at $34.15. This suggests a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at the current price, around $28. The stop loss should be set at $29 to protect against any unexpected price recovery. The target price should be set at $27, slightly above the support price, allowing you to take profits before the market hits major support at $27.36. This strategy aims to profit from the anticipated price decline while minimizing potential losses. BTC's historical price data reveals a fluctuating trend, with recent price points suggesting a downward movement. The forecast price indicates further decline over the coming week, aligning with the bearish sentiment suggested by the historical data. Considering this downward trend and the forecast, a short position on BTC appears to be the most suitable strategy. To execute this strategy effectively, an entry price of $576 should be targeted, aligning with the current price and the anticipated decline. The stop loss should be set at $596 to safeguard against any unexpected upward movement. The target price can be set at $541, taking advantage of the forecasted price drop while leaving room for potential price fluctuations. This strategy aims to capitalize on the short-term bearish momentum of BTC, aiming for profits within a relatively short investment horizon. Given the provided price history and forecast for THETA network, a short-term investment strategy appears most suitable. The 2-week price history shows a decline, and the forecast predicts further drops. Although the support price is at $2.579, the current price is above this level, indicating potential for a further dip. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of approximately $2.73. The stop loss should be set at $2.85, slightly above the forecast price, to limit potential losses. The target price would be $2.58, aligning with the support price, allowing for a reasonable profit margin while mitigating risk. Based on the provided price information for WorldCoin, a short-term investment strategy focusing on a long position appears promising. The historical price data reveals a fluctuating trend with recent dips, but the forecast suggests a gradual upward movement over the next week. The current price sits relatively close to the support price, indicating a potential for a rebound. The resistance price, while higher, suggests that there is still room for the price to appreciate. Therefore, an aggressive short-term investment strategy could involve entering a long position at the current price around $3.05. A stop loss could be placed slightly below the recent low of $2.87 to mitigate potential losses. The target price could be set at $3.126, the resistance level, aiming to capture potential gains from the anticipated upward price movement. This strategy capitalizes on the perceived undervaluation of WorldCoin and the potential for a short-term price surge. The provided price history and forecast for Hooked Protocol suggest a potential short-term bearish trend. While the current price is hovering around the support level of $0.4376, the forecast indicates a gradual decline towards 55 cents in the coming weeks. This downward pressure, coupled with the recent price drop from $0.686 to 54 cents, suggests that the price may continue to fall in the short term. Therefore, a short-term investment strategy focusing on a short position is recommended. An entry price around 57 cents, aligning with the current price and the forecast, would be suitable. The stop loss should be placed at $0.585, slightly above the current price, to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.538, which is below the current support level and aligns with the forecasted decline. This strategy aims to capitalize on the anticipated downward momentum of Hooked Protocol in the short term. Based on the provided price information for Artificial Superintelligence Alliance, a cautious investment strategy focusing on the short-term outlook appears most suitable. While the forecast suggests a slight upward trend, the historical price data reveals significant volatility. The recent decline in prices, approaching the support level of $1.679, indicates a potential for a short-term bounce. Therefore, a long position could be considered, aiming to capitalize on this potential rebound. An entry price around $1.72, slightly above the current price, would allow for some margin of safety. A stop-loss order should be placed at $1.68, below the recent lows, to limit potential losses. The target price could be set at $1.82, aiming to capture the anticipated upward movement and reach the resistance level. This strategy prioritizes risk management by establishing clear entry and exit points, while taking advantage of the potential for short-term price appreciation. Based on the historical price data and the provided forecast for Polkadot, a short-term investment strategy with a long position appears most suitable. The historical prices demonstrate a fluctuating trend but generally hover around the $9 mark, while the forecast predicts a gradual increase over the next week. This suggests a potential for upward movement in the short term. Therefore, an entry price of $9 aligns with the current price and the forecast. A stop loss at $8.54, slightly below the recent support price, would protect against any unexpected downward movement. The target price should be set at $9.72, which aligns with the highest predicted price in the forecast, allowing for potential profit capture before the market potentially cools. This strategy capitalizes on the predicted short-term upward momentum of Polkadot, while managing risk through a well-defined stop loss. Filecoin shows a downward trend in the 2-week price change and the forecast suggests further declines. The current price is near the support level of $6.422, indicating potential for a bounce, but the resistance at $8.061 is far away. Given this context, a short-term bearish strategy seems more appropriate. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price around $6.69. A stop loss could be placed at $6.85 to limit potential losses if the price unexpectedly rallies. The target price could be set at $6.26, aligning with the support level and the predicted price decline. This strategy aims to capitalize on the anticipated downward movement in Filecoin price over the short term. Based on the provided Conflux price history and forecast, a short-term investment strategy appears most suitable. The historical data reveals a fluctuating price trend with a recent downward movement. While the forecast predicts a slight upward trajectory, it remains relatively volatile, suggesting potential for short-term gains. Therefore, an aggressive short-term strategy would involve opening a short position at the current market price, around $0.215. The stop loss should be placed at $0.222, slightly above the forecast high, to minimize potential losses if the price unexpectedly rises. The target price would be set at $0.198, aligning with a significant support level identified in the historical data. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop loss. Given the provided historical price data for Ethereum name service and its forecast, a medium-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating trend with an overall upward bias, suggesting potential for further growth. The forecast indicates a continued upward trajectory, with prices projected to reach $49 and potentially even $50 in the coming weeks. Therefore, a long position in Ethereum name service is recommended. An entry price around $44, aligning with the immediate forecast, would be prudent. A stop-loss order placed at $42.53, the identified support price, would protect against significant downside risk. The target price should be set at $47.28, the resistance level, aiming to capitalize on the anticipated upward momentum. This strategy allows for potential profits while managing risk within a medium-term investment horizon. Based on the provided information about Avalanche, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend, with recent dips towards the support price of $44.63. However, the forecast price suggests a slight upward movement, hovering around $51. This indicates a potential for consolidation and a gradual recovery in the coming weeks. Therefore, an entry price of $48.50 would allow you to buy in near the support level while anticipating an upward trend. A stop loss at $44.50 would protect against significant price drops, while a target price of $53 aims to capitalize on the potential price increase towards the resistance level. This strategy balances risk and reward, allowing you to participate in a potential recovery while mitigating potential losses. Given the price trends and forecast for Vecane, a cautious investment strategy would focus on a medium-term approach. The historical prices show a recent downward trend, with the forecast indicating further declines in the short term. However, the support price of $0.02015 suggests a potential floor for the price. The resistance at $0.06794 indicates that significant upward movement is unlikely in the near future. In this scenario, a long position is not recommended due to the prevailing bearish sentiment. A more suitable strategy would be to wait for a price reversal signal before considering a long position. This could involve waiting for Vecane to bounce off the support level or for the forecast to indicate a shift towards an upward trend. A potential entry point could be around $0.055, allowing you to buy in at a relatively low price with potential for upside if the price rebounds. The stop loss should be set at $0.052 to limit potential losses, and the target price could be set at 6 cents, aiming for a moderate profit if the price recovers. This medium-term approach allows you to capitalize on a potential price rebound while mitigating the risk associated with the current downward trend. Given the price trends and forecast for PENDLE, a cautious investment strategy would focus on a medium-term approach. The historical prices show some volatility, with a recent dip followed by a slight recovery. The forecast suggests a potential upward movement, but with some fluctuations. The support price at $5.924 provides a potential floor for the price, while the resistance at $6.837 indicates the upper limit for the near future. Considering these factors, a long position is advisable for a medium-term investment strategy. A suitable entry price would be around $6.15, taking advantage of the current price level and potential for upward movement. The stop loss should be set at $5.95 to limit potential losses if the price drops below the support level. The target price could be set at $6.60, aiming to capture a significant portion of the potential upward movement while staying below the resistance level. This strategy allows for a balanced approach, aiming for reasonable returns while managing risk effectively. Based on the provided The Sandbox price history and forecast, a cautious short-term investment strategy appears suitable. The recent price history reveals a downward trend, with the Sandbox dipping below its recent highs. The forecast predicts continued price declines over the next week, suggesting a bearish outlook in the short term. Therefore, a short position is recommended to capitalize on this anticipated decline. An entry price around $0.760 would align with the current price and the forecast's initial decline. A stop-loss order at $0.800 would safeguard against unexpected upward movements. The target price could be set at $0.700, anticipating a moderate decline based on the forecast. This strategy aims to profit from the short-term downward momentum while mitigating potential losses. Based on the provided information for Decentraland, a cautious short-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with a slight downward bias over the past 2 weeks. The forecast price also suggests a continued downward movement in the coming week. Considering this bearish outlook, a short position would be advisable. A conservative entry price could be around 64 cents, slightly above the current price and the recent support level. The stop loss should be set at 66 cents, above the entry price, to limit potential losses. The target price could be set at 59 cents, aligning with the lower end of the forecast range and offering a reasonable profit potential. This strategy aims to capitalize on the anticipated price decline while managing risk effectively. Based on the provided information for ENG coin, a cautious investment strategy with a medium-term perspective is recommended. The historical price data reveals a downward trend in recent weeks, with the price currently hovering near the support level of $0.1651. Although the forecast suggests a slight upward movement over the next week, reaching around $0.318 to $0.322, this recovery might be temporary. The resistance level at $0.3768 indicates that significant upward momentum is unlikely in the short term. Therefore, a long position is suggested, aiming to capitalize on the potential for a moderate price increase towards the forecast levels. The entry price should be set at $0.304, aligning with the recent price action and allowing for some room for price consolidation before entering a trade. The stop loss should be placed at $0.293, slightly below the recent lows, to protect against further downward movement. The target price can be set at $0.323, aligning with the upper end of the forecast range, providing a realistic profit target. This strategy balances the potential for gains with risk management, making it suitable for a medium-term investment horizon. Given the price trends and forecast for Uniswap, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward trend, but the forecast suggests a period of consolidation around $17. This indicates that there is limited potential for significant price movement in the short term. While the support price is at $9.297 and the resistance price is at $17.711, the current price is relatively close to the resistance level. Therefore, a short position with a cautious approach is recommended. An entry price of $17 would allow you to capitalize on any potential pullback towards the support level. The stop loss should be set at $17.20 to protect against any unexpected price increase. The target price should be set at $16.50, allowing you to take profits before the price reaches the support level. This strategy aims to capture a small profit from a potential consolidation period in the Uniswap market. The provided data for Chainlink suggests a potential long-term investment opportunity. While the 2-week price history shows some volatility, the forecast indicates a consistent upward trend, suggesting bullish momentum. The current price is close to the support level of $26.33, presenting a potential entry point for a long position. Considering the forecast reaching $30 within the next week, a long-term investment strategy targeting $29.32, the resistance level, would be prudent. A stop-loss order placed at $26, slightly below the support level, would help mitigate risk. This strategy capitalizes on the anticipated price increase while managing potential downside. Holding the position for a longer duration could allow for further gains as Chainlink potentially breaks through the resistance level and enters a new price range. Based on the provided Aave price information, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals an overall upward trend, with a recent consolidation phase. While the forecast suggests continued growth, the absence of clear support and resistance levels indicates potential volatility. Therefore, a long position is recommended, aiming to capitalize on the anticipated upward momentum. An entry price of $300 could be considered, aligning with the recent price consolidation and below the highest point in the historical data. The stop loss should be set at $274, slightly below the recent dip, to mitigate risk. The target price should be $394, aligning with the highest forecasted price, allowing for potential profit realization. This strategy balances risk and reward, aiming to benefit from the anticipated price increase while safeguarding against significant downside movement. Given the price history and forecast for EOS, a cautious investment strategy would be to adopt a short-term perspective, capitalizing on the potential for price fluctuations within the next week. The historical price data shows volatility, with recent declines suggesting a potential for further downward movement. The forecast prices also indicate a downward trend, with a gradual decline over the next week. This suggests that the current price point may be a suitable entry point for a short position. Therefore, an investment strategy for EOS would involve taking a short position with an entry price around $1.1. A stop-loss order should be placed at $1.15 to limit potential losses if the price unexpectedly rises. The target price could be set at $1.04, aligning with the lower end of the forecast price range and allowing for profit taking before the potential for further price decline diminishes. This strategy aims to capitalize on the short-term bearish outlook for EOS while managing risk through a well-defined stop-loss order. Given the price trends and forecast for Tron, a cautious investment strategy focusing on the short term is recommended. While the historical prices show a downward trend, the forecast suggests a slight recovery in the coming week. The support price of $0.2819 acts as a potential floor, while the resistance level of $0.3244 indicates an upper limit for the price movement. Considering this, a long position could be considered, aiming to capitalize on the potential price increase towards the resistance level. An entry price around $0.285, slightly above the support price, would allow you to enter the market with a buffer against immediate downward pressure. A stop loss should be placed at $0.275 to minimize potential losses if the price breaks below the support level. The target price could be set at $0.315, aligning with the higher end of the forecast and providing a reasonable profit margin. This strategy prioritizes risk management by setting a tight stop loss and aims to capture a modest gain within a short time frame. Given the price trends and forecast for Suncoin, a cautious investment strategy would focus on a short-term approach, aiming to capitalize on potential price fluctuations within a defined range. The historical price data shows a generally downward trend over the past 2 weeks, with the forecast indicating further declines in the short term. The support price sits at $0.02453, acting as a potential floor for the price, while the resistance level is at $0.0261, suggesting an upper limit for the near-term price movement. Therefore, a short position on Suncoin appears to be more favorable at this time. A conservative entry price could be around $0.0255, aligning with the recent price action and slightly above the support level. A stop-loss order should be placed at $0.0261, just above the resistance level, to limit potential losses if the price unexpectedly moves higher. The target price could be set at $0.0245, slightly below the support price, allowing for potential profit taking before the price potentially finds a floor.